Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Tuesday, March 10th, and you are back. We're live for more helpful news, commentary, answers to your crypto questions in the place you love to go where everybody knows your name. I'm talking about the Rise Up Morning Show. Thank you so much for being the very best part of what we do. I'm just going to get right into it today because, Will, I know you've got some business to take care of. I hope that you're well. Alex, I hope you're well. And you, yes, you, wherever you are listening, that your candles are green. If you're live, leave your questions in the comments. Mr. Watson, you had an update backstage for us about Pudgy World. You want to tell us how you are and how your experience in the metaverse this time around has been?
It's like actually a fun metaverse with some things to do in it. Which is weird because when metaverses were metaverses, there was nothing to do in it except to go and look at virtual museums of their NFT art. And that was kind of about it. And then even still, I'll go hop into the other side, which is the metaverse by the Bored Ape Yacht Club. And a metaverse, for those of you who don't know, it's just like a virtual video game world, right? Just a virtual video game world. And there's like some NFT technology thrown in the mix, right? But it's a virtual gaming world, open world. You can go explore, do stuff, chat with people, ideally play games and have things to do, all that kind of stuff. And so anyway, I hopped in yesterday because I wanted to experience it. And it starts off with this quest. And the quest brings you to these 12 towns that they've created from scratch. And you're trying to find clues to go and find Polly, which is this pink penguin that's missing. And anyway, that initial quest takes you probably about like an hour and a half or so. And you find Polly and it's all good, great, and grand. In all these towns, you have like these arcade game setups, and they have like 12 or 15, or it's like 9 or 15. I can't remember the number. Like different mini games, like Mario Party-esque type games, like mobile app type games, things like that. And like I was having a pretty fun time exploring all the different variety of games that they had in there. You can go and catch fish, and then there's this like platform game that I spent an hour and 15 minutes trying to complete last night, and then I didn't, and I went to bed, and Violet said, "You failed to bring honor to this house," as I'm this adorable little penguin trying to jump through these platforms. And so I woke up this morning, filmed my TikTok, hopped on here this morning, and I brought honor to the house this morning. Completed the platform, and like, you earn traits for your penguin, like little things you can add, and they'll be doing some events in there and things, and adding some more to it. But it's a metaverse that isn't empty. Crazy. Wow.
I was going to add that what is a metaverse? It's when a bunch of tech bros decided that they were going to somehow deliver altered carbon to people in like 6 months of development with very little startup capital, and ended up producing a worse version of the thing that RuneScape and World of Warcraft made about 20 years ago. And somehow all of these tech bro products never made it anywhere even close to 2% as cool as those worlds.
Yep. Yeah. No, that's right. Is Pudgy World as cool as World of Warcraft and RuneScape?
Okay, no. That's not fair. But it's also, I would say it's not trying to be, because no one's shilling Pudgy World to me, and I don't think I have to buy a $1,000 NFT to get in there, do I?
No, you can get in for free.
Huzzah!
Yeah, you can get in totally for free.
That was the roadmap.
I did give them $10 though. I said, because you can go and like buy their little currency, which you can earn for free in the game. But I was like, hey guys, nice job. Here's $10.
Wow.
Evan, I've told this story before, but the moment that I realized that the metaverse, like that, when that was a trend and a narrative thing, that was gone, is when we did the free one with Spatial, and like 8 people enjoyed it. I was like, oh, okay, so we just actually don't even really want this as a product, let alone want to pay for it. We're just not really into it.
I feel like metaverse was actually tech bros being like, hey, I'm tired of meeting in teams.
Yeah.
Let's meet in this other virtual world because it'll be cool.
And that was how Spatial started. It was just a meeting software that you could then do in your, like, what was that? In your Oculus. And it was cool. Like I had a fun time. You can go in there, you can like custom build little things. It's very interactive. It's cool, but it's not like a thing that I'm going to go spend 6 hours in, regularly or anything like that. But the meetings were fun, and it was cool to like get everyone together and hang out in that way, especially when everyone's all over the world. But then they got, I guess, a bunch of, alleged demand from NFT stuff. And so they basically hard pivoted, and they raised $50 million and went on like this acquisition spree of trying to get users without thinking about revenue or anything at all. And then, now I don't know what they do, but they certainly don't do what they were doing.
If you want to try Pudgy World for yourself, the URL is pudgy, Pudgy, world.com. Or you can check them out at Pudgy World _ on X. Will, are you giving out your handle so people can find you in Pudgy World?
Can I do that?
Yeah, I imagine so. I mean, everybody's got their little penguin.
Is it open world or is it
it's like there's a chat. There's like a chat feature and stuff.
Yeah, there's a chat in there and stuff. I don't know. My name is Marcus in the game.
Just straight up Marcus?
Yeah, just Marcus. Marcus.
Dang. Snagged that handle early. Okay.
Yeah, I am Marcus, and I am a pink penguin with a unicorn hat and a leather jacket.
I am my penguin.
I am my penguin, and my penguin is me.
There are many like it. This one is mine.
Yeah,
check it out. Cool.
Some actually, hang on a second. I'll show you guys my penguin. He's super cool. Real quick. Hang on.
Okay.
Hang on.
All right.
Welcome to the Rise of Penguin show.
Yeah.
Not sponsored by Pudgy Penguins, but it could be. Oh, we got the music too.
Oh, is the music coming through?
Yeah. No. Let it vibe. Oh yeah, Marcus.
Yeah.
Look at his little trendy cross shoulder.
Yeah, buddy. That's a rare trait right there that I got for buying like actual toys. So like I got all this shit. Sorry, kid show. I got all this stuff from buying like their physical toys and like scanning the QR code.
Incredible.
Yeah, it's lovely. And then you can go into the world. That's me, Marcus. I got all these items and badges. I got a few badges. Oh wait, add a badge. Yeah, add a badge. Yeah, I gotta make sure people know what's up. Hell yeah, I'll do all that later.
That's one fine ass penguin.
That's one fine ass penguin.
Yeah,
I do say so myself.
Accessorized, moisturized. What else would you expect?
Yeah. Some other things also non-penguin related I would just wanted to bring up to the show. One thing is Kraken has partnered with the NASDAQ to bring 24/7 live trading of tokenized stocks.
That's right.
Hey, good job,
You want to dive into the story? And I'm curious to know, have you seen the OKX story too?
No, I have not. I spent this morning being a penguin.
Interesting.
Yeah, I got surface level information to share today right now.
Okay,
so you might want to dive into the story.
Let me read in, folks, to the story here. This is a headline coming to you from The Block earlier yesterday. It said NASDAQ has partnered with Kraken's parent company Payword to build infrastructure connecting tokenized equity markets with blockchain networks. Basically, the difficult thing about putting stocks on a blockchain and vice versa is creating some kind of link between them. NASDAQ, as the regulated market, will anchor the permission side of the system, while Kraken's xStocks framework is going to power the blockchain-based infrastructure layer on the other side, connecting tokenized equities to some sort of decentralized financial network in different eligible jurisdictions. And they expect their tokenized equity framework to begin rolling out in the first half of 2027. So give me some thoughts on that while I pull up this OKX news, because OKX is essentially doing a what about with NYSE, it looks like. What do you think about it? Big deal?
I mean, I view it as not necessarily the biggest deal because, I mean, like, it's cool, right? It's great. It is like stepping in to try to take market share from your Fidelities and the rest of the like, right? Your Robinhoods, all that kind of stuff. So it's cool. I look at it as like just kind of the first domino to fall of what will fall from the first big domino of the Fed Reserve opening up themselves for Kraken to be able to use Fed wires. So that's pretty cool. So, it's like, okay, what other dominoes are going to fall now that Kraken is the first US cryptocurrency exchange to get that like Federal Reserve access ability? So like what else is going to come? So I'm just kind of curious to see what else is released.
Got it. So this other news coming by way of CoinDesk is that the NYSE parent company ICE, Intercontinental Exchange, has invested in OKX, the cryptocurrency exchange, at a $25 billion valuation. And the reason they are investing is because they want to do the exact same thing that Payward and Nasdaq are doing, launching tokenized stocks and crypto futures products. They are going to get a board seat, ICE will, on OKX's board of directors, and they're going to license OKX's spot crypto prices for crypto futures products, while OKX will offer ICE futures and tokenized equities to its customers in the US. I do not see here on this article when this is expected to go live, but again, the Payward / Kraken and Nasdaq partnership is expected to launch 2027. So it's an interesting race there. NYSE and Nasdaq coming on chain.
But it is interesting. Kraken really has been stacking up a lot of W's lately. Now they just need to tell people that they exist.
I wonder who could help with that.
I wonder who could possibly help with that. Would be crazy.
I think that those big, I mean, you know, to be fair, Kraken is a multi-billion-dollar a year in revenue company, right? They're targeting, at least last I heard, it was supposed to be Q1, which were, you know, they were like targeting Q1 2026 for an IPO, which I would say is not happening. At like what, a $20 billion valuation. I think last year they made 2.2 billion. So that's, according to our valuation math, what is that, like 8x revenue? So on the scale of crypto stuff, what I would call extremely conservative. But yeah, I think that people are like aware that it exists. I think the thing that for some reason Kraken has been really quiet on is the fact that the ecosystem is as full as it is, and that all the same stuff that exists in the base ecosystem exists over there in a smaller capacity, right? Like they're not, you know, stuff on Inc is not doing the volume, doesn't have the TVL, doesn't have all the same activity that base has. But like Coinbase went really hard on base, whereas Kraken is basically been radio silent on Inc. That's a huge difference for me. But like the exchange, I mean, I see commercials, you know, and they're whatever. I think the story could be better. I think we focus way too much on just like a place to, as funny as it sounds, I think we focus way too much on, yeah, here, come here and buy all the crypto you could ever desire, instead of it being, you know, the gateway to this new financial system, which I feel like
come to Kraken. Come to Kraken and have an immediate high yield savings account. Oh, whoa,
okay,
wow. And then all of a sudden, your pool of potential customers is about 78 times, I'm just going to pick that number, the size as compared to, hey, crypto people, come and buy this thing. The amount of people who are actually like out here buying crypto and like in the DeFi ecosystem in comparison to the total population is like 1% of the population. Do you want to know who'd be interested in having a high yield savings account where they could earn 4% interest? Just about every single person. So you're just think about that mess. Think if Coinbase, instead of for the Super Bowl, having that ad where it was they took the Backstreet Boys song or NSYNC, I forget which one it was, and then made everybody hate them by changing the lyrics. Imagine if they were just like, hey, you want a high yield savings account? Boom, earn this percent. Move from your bank. And then boom, commercial end. That'd be so much more impactful.
Here's an interesting thought experiment and a question for you too. So all of these exchanges for the past how many years have just kind of been on this quest to add trading support for every asset under the sun. And obviously, as a business decision, I understand more assets on your platform means more people who want that thing are more likely to trade it there because blah, 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 whatever. Makes sense. Do you think that it would be better or worse, and I feel like I'm going to make you pick one, if at this point, knowing everything we know now, any of them started drastically scaling back on the number? Like, if I'm like what you said, Will, that's more appealing to me as an individual. Like instant access to a high yield savings account. In Kraken's case, stock trading access, 24/7. Whatever the other big selling benefits are, access to the best, most vetted whatever cryptocurrencies that exist, much more pared down list, and not 1,000 random nothings that we all know are nonsense. Like, do you think it would be better or worse for these exchanges to be like, to make the decision on their side to stop supporting 500 altcoins that like we all could collectively say are not worth anything, but are still being traded? Because I think that's kind of what contributes to these like out of business businesses staying in business forever.
Well, the other thing too is it also
trading their nonsense tokens.
Sorry to talk over you there, but it also contributes to like altcoin rallies not doing as well, because it's kind of a problem that people are given too many options, because most people who buy crypto don't leave the centralized exchanges still, which is something, we should get more people to try to do. Not the centralized exchanges because they lose money, but having all those options, people will be like, oh, I'll buy all of these. Whereas before, in like the 2020, it's like, oh, okay, cool. We got like 30 options. Well, I guess we'll just stick here. And then money really just kind of bounced between those. And you saw a lot of the mid caps and a handful of smaller caps do really, really, really well. That's another thing I hadn't thought about. Another little side effect. Speaking of centralized exchanges, and that reminded me.
Oh, no. Go ahead, Will. I'm looking up a data bit about how often and if there are any published criteria for like thresholds at which centralized exchanges delist tokens, because I see it happen all the time. I wanted to get some numbers before I respond. Go ahead.
Yeah, that would be interesting to find out how often they delist tokens, because you would feel like they should really be chopping a lot of them off there. But who's to say? But the other thing, because I have to leave in a couple minutes, that I wanted to put on everybody's radar screen is, it looks like, this is an official rumor mill on Twitter, I haven't verified this, but it looks like banks, I wouldn't be shocked, it looks like banks are trying to sue the US government and or some other regulating organization for providing crypto companies banking licenses, thinking that it will cause additional risk and unneeded exposure to scams to the US populace. And so banks are trying to sue the government for providing banking licenses to crypto companies, which would be a move I would not be surprised to see. There's no way in hell, in my personal opinion, without being a legal professional in any way, shape, or form, that I could see them to have grounds to stand on. It would all just be a delaying tactic to try to stop or cause problems for the crypto industry, and to also try to give them an extra chip or leverage tool in their negotiations with their lobbyists versus the crypto industry lobbyists in Washington.
Yeah. Do you see, is this the Bank Policy Institute?
I believe so, yes.
Yeah. So they have really done a real hit on crypto. If you go to their website, just search Bank Policy Institute, I think it's bpi.com. They have a couple of pages, they have press releases where they talk the last several months as people have applied for these neobank licenses, as crypto companies have gone to Capitol Hill or whatever. Even when we've done something that I would say is like helpful, they're so good. They rhetorically, masterfully spin these yarns of like, this is why crypto can never enter your banking, and this is why consumers are deeply at risk. And I don't know, it's extremely well done. I don't have one offhand, but I've read several of their statements, and it's almost like a parallel alternate universe that they live in. This must be where Elizabeth Warren gets her news, is what it makes me feel like.
Yeah.
Interesting.
Yeah, so the lawsuit is being contemplated. They're like exploring legal action. The BPI specifically would be suing the government's banking regulator, which is the OCC.
Interesting. Will, I'm glad to give you a final thought. I've got my numbers up, and we can return to Alex's question, but I know you got to go. So anything you want to leave the folks before you say bye?
All I'm going to say is stop putting morning calls on my calendar. Everyone, I know it's all of you. I'm looking at you. It's been 7 a.m. Now it's 8:30 a.m. right after daylight savings. You need to stop. You got to stop.
It's actually me, so that I don't have to spend so much time on screen with someone so much more handsome than me, because it makes me look bad. So I get him out of here to go take a bunch of calls.
Well, that's nice. That makes me feel good a little bit. Do I have anything else to share? No, I'm still waiting for confirmation on Bitcoin to get above.
Why Bitcoin sad, or is it happy? What's it doing?
It's kind of happy. It's up 3%.
Maybe good, maybe
now.
shit.
But the stock market still looks like it's going to roll over a bit. If Bitcoin's going to bounce, it's going to bounce here for a tiny bit. But I'm still bearish. I'm still bearish, but like I might take a play here or there in the market. We'll see. I'm not quite sure. But yeah, I would just say wait until the weekly candle close to be like, hey, Bitcoin's going to pump here. I just have a hard time seeing it because I still see the stock market rolling over, and I still just don't see a world where Bitcoin does well while stocks don't do well. But we'll see. Anyway, if you're buying assets, make sure they're the ones you have long-term conviction in and not like super risky ones that you're just like, maybe this will go up, and put some thought, some research behind it. But anyway, I got to run. So everybody, hope you have a good day. Do good things and be good people, make a bunch of money, and do a little queen wave.
He's your friend and he's mine, Mr. Will Watson.
Bye.
See you soon, brother. And so we return to the question, exchanges. Why don't they just list crappy tokens? I think this is a really good question, but I think they already are doing this to the best of their ability.
So that's my contention, is that they do. Every now and then we see them delisting 2 or 3, but I'm saying they need to delist like 500.
I see.
And I think the criteria are broken. I don't know what the criteria are, but given what is still allowed to be traded on most of these platforms, I would have to say that it's not good. Like I think it needs more. But I would
couldn't you imagine
it's a
the
revenue
cascade
suck,
of customer service? Yeah, but it probably isn't a revenue suck once it's up, unless that token requires a lot of ongoing maintenance. Most of them don't. I think it's like a one and done kind of thing.
No, I mean exactly that. The keeping it there is probably low maintenance, and you might as well, because this stuff can just arbitrarily go. So there's always a market for even the deadest, most useless token of all time.
Yeah, but that if they removed an asset if they removed assets more aggressively, you just know that there would be a lot more of those people that Robinhood was complaining about coming to the exchange and saying, why did you freeze my account? What happened to my money? I can't get rid of my tokens. I don't know how to sell this thing.
For sure.
You know what I mean? And the exchanges, not their problem, but would get a lot of flack for it. A lot of people would blame them, I think. I don't know. I agree with you, though. I
feel like they would, but they get flack anyway. So you might as well get flack while doing something beneficial to the entire industry, because there's way too many things. I mean, no one needs 50 different altcoins, let alone 1,000.
Okay, but is this like an issue of you can't choose something valuable for yourself, so I'm going to make a decision for you? Because I'm kind of against that.
I'm against it in theory. But I'm also against illegitimately propping up failed businesses and what I would say falsely advertising to someone who's coming to snoop around to say whether or not this thing has any potential merit to it, and then being able to chalk up that, well, it's being traded on several gigantic exchange platforms. It must be good. I'm going to buy some. I'm going to lose everything. If we want to talk about like consumer protections that we're, as a regulatory body so concerned about, why not at least try considering thinking outside of the box and thinking about something that might actually protect a consumer?
Yeah, I will say that most of the really risky stuff does tend to get delisted. Like if something has clearly been abandoned, if something is illiquid, if it's a micro cap, it doesn't have any. Take a look. I think they do this, at least per my research here. This is different for different exchanges. Some of them do delistings quarterly. Some of them do them biannually. Some of them do them as needed. But I can say anecdotally, I see all the majors delisting stuff, what I would call at a regular cadence that I imagine is reasonable given their business operations. And I would say if it is in alignment with those rules, token's got, I don't know, no liquidity, if it's been hacked or exploited, if it's risky, like the founder is, run away or something. I don't know.
So
what do you see?
I guess, and I could see it going either way. I accept and honestly embrace your philosophy about, consumer choice. A good halfway step could be better like on-screen notices or warnings about tokens that have like, I don't know, not generated any revenue in 3 years or something like that are still listed, that may have trading volume because of speculation. I'm trying to think about a good example of one. Think about what's that stupid one with the Jasmy? That thing make any money?
Okay.
That's not generated from the fact that it gets shilled and traded a lot? Does it do anything? I'm genuinely asking. I don't know.
No, but let me find out really quick on CoinGecko and see what the volume is. The fact that people still talk about it. The other one I would look up is maybe like Fetch. You know what I mean?
Sure.
Those are two good ones. Let's see Jasmy on CoinGecko. And hang on, people in podcast land, you know what to do. You're going to have to head over to YouTube and search for the Rise Up Morning Show, because we will be doing a little of screening, a little of sharing.
Because I guess my contention there would be that we have decentralized exchanges. And so if the things that we're interested in doing are consumer protection and also protecting innovation, then what we should be doing is creating a framework for a DEX to exist. And that's where you could then go trade literally anything you wanted. But the thing that is being sold as like a beginner friendly, look at the consumer, here you go, here are some choices, here's what these things are, here's what they do, here's how you can interact with them, here's where you can get some of it, blah, 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 whatever. These things are already centralized. We already have plenty of concerns about centralized exchanges as far as, don't keep your stuff there, or only keep there what you can afford to lose. And I don't know, it's just like, if you wanted to clean up that image, as an exchange, if I was an exchange and I was looking out at this sea, and I see that basically all of the coverage on social media about centralized exchanges is make sure you don't keep your money there. And I want that to change. Coinbase has obviously taken steps for that, right? The introduction of the card that requires you to carry a balance on the platform in order to qualify for a higher interest rate, or a higher rewards rate. That's one example of something to try to motivate people to keep more on a platform. And I'm sure there's more instances of that, but I don't know. It doesn't seem like a far stretch to say, like, look, after, this and that and all these problems, and you could do like this big, press release about it and explain the move, and just say, we're ending support for like 250 tokens that have never generated any revenue, are exclusively being propped up by trading volume and over leveraged traders on futures and perps and all this other stuff. And we can't find any semblance of a business behind any of these things. They just sort of exist. Twitter pages are dormant. There hasn't been a meaningful update from any of these things in at least a year. On and on, whatever. All the things that you could say about the millions of cryptocurrencies that are just defunct, never going to do anything. You and I both know that if you went on to any of these big exchanges, we could find a whole litany of tokens that you would say, oh, do not buy that thing. Sure. And I feel like if someone who's been here in this industry for a long time would be able to look at something and immediately go like, oh, don't buy that. Why is it there?
I'm with you. I'm totally with you. That would be a great department. It could probably save somebody like you or me a lot of money. Looking at the screen here, here's what the numbers say. And this is
ICP.
Back to the napkin math.
Nailed it.
So I'm looking right now at artificial superintelligence, formerly known as Fetch, the merge token. Previously, I looked at Jasmy. These tokens both have sub $300 million market caps. So, fractions of a billion. And they're in about the same league. Jasmy's at like 280 million. Fetch is at like 300 and some million. Mm-hmm. And on CoinGecko.com, if you look up a token, there's a handy dandy little organizational feature where you can click to see the different markets, the news, similar tokens right at the top. I clicked the markets tab. I came down here to this graph that shows me all the different centralized or decentralized exchanges where this token trades. I can see just centralized, just decentralized, but I've got all toggled on. And right now this is sorted by, not by volume. I'm not sure what it's sorted by, but as you can see for this token, and this is fairly similar. There actually was a little less volume for Jasmy, but the volume for Jasmy was spread more evenly. This is pretty much only traded on Binance and pretty much only traded on Coinbase. Looks like Binance has 11% of the volume. Coinbase is next with almost 3%. And the volume in the last 24 hours has been $4.6 million. That seems, enough. It also tells you what their spread is, 0.07%, which I am reading. Alex, double check me on this, 0.07. They're saying like 0.07 of 1%, right? 0.07. Yeah, okay. So in that case, let's do some back of the napkin math. In that case, they are making 1, 2, 3, 4 times 7, 4.5 times 7. They are making between $2,800 and $3,500 a day. Binance is on the trading of this token. Someone like Kraken down here, who's only doing a couple 100,000, they're making like $200 a day on the trading of this token.
And just to be
let's say
clear,
they've got tens of thousands of tokens just like this. Go ahead, be clear.
Binance made like over $15 billion last year.
Yeah. Okay. And I would be willing to bet that they've probably got some kind of deal when they decided to list this token. I don't have a lot of transparency into that, but there has been enough anecdotal, alleged, and also verified evidence about how market making deals are done. It is likely, I would go so far beyond possible as to say it's likely that Binance could be making the market for this token. They may have been paid by Fetch, and they may have an agreement to make this market for X amount of time or until it loses X amount of dollars or whatever. But at that price, if they've got tokens like Jasmy and tokens like Fetch making them $3,000 a day, and we extend that out over a year, you're talking, six figures, mid six figures. For a $15 billion business, that's not significant one by one, but I would be willing to bet that this is probably an 8 or 9 figure revenue stream for a major exchange, trading volume on junk tokens. So at that point, I don't know. We'd need to maybe see a good financial report. At that point, I could see why somebody on the other side would push back against you, though, and be like, no, Alex, we got to keep all the tokens, as many as we can. This is our business.
Yeah, and I would say I'm sure that's what it is. I'm sure that's why it is. And I guess my curiosity is, what is ultimately better for a company like a centralized exchange's bottom line? And again, I am genuinely asking. I do not know. I don't know how all of the inner workings are here. I don't know the answer to this, but it's interesting to question. I'm sure that's what it is. I'm sure that's why they have all these tokens up there, because they make money from the trading fees. And if you have 1,000 different tokens and all of them make you a couple $1,000s a day, or even a few $100s a day, you're making good money. And that's how these things make billions of dollars a year. I wonder, though, given how huge the TAM is for these exchanges and how few people are actively doing all of that and still getting them to that revenue target, would it improve if they got way more people interested in using the platform by being way more diligent about which tokens get traded there, instead of just this, what we know to be, at least with some exchanges, proven over the years, pay to play? Like, how much can you afford to give us to list this thing, and how much of the volume are we going to capture, and blah blah blah. Like, that's kind of been
I could see that. Like if they did the river business model, like we only sell Bitcoin, it's the best token, and that's why we can offer you the best spreads, because we're not out here making markets with other crappy tokens. Come buy Bitcoin here, enjoy the best experience.
Especially while there are now other products that these exchanges are offering. Like, look at how long did like Robinhood and Venmo and PayPal and all these things still just sell Bitcoin, ETH, Litecoin and Bitcoin Cash, and then maybe add 2 or 3 other things? Like, and I don't even mean go down that, that low. I just mean, like, if on the profile page on an exchange, if I look up an asset, I get a lot more information about, hey, this company, the company behind this thing has X, Y, and Z as a product. Their primary sources of revenue are this, that, and this. And if number one with all these things is from people trading the token and everything else is negligible, I would want to know that as someone who's going to go buy it. So even if maybe the compromise is don't delist it, but put way more information there. And if someone doesn't read it, someone doesn't read it. You lead a horse to water kind of thing. But I don't know. That's been my hypothesis for crypto lately, is that, like, maybe the fact that everything is trying to do so much and have so many things ends up turning off more people than it brings to the table. these companies it would be better for everyone if way more people felt like it was safer to do something than just felt sketched out by the fact that I'm going to go onto this platform. I'm going to open up a centralized exchange for the first time. Oh, look, there's 28,000 cryptocurrencies for me to choose from. Never mind. Click. Versus there's 8. That's appetizing. I can learn about 8 things.
Yeah, I feel better.
I don't know, but we can move on. It's something I've been chewing on lately as we look around, and there's just, especially now, the bear market's a good time to look at things that are still here, that are like still being propped up, and just question like, why is this company still in business? And if the answer is that there is 24/7, leveraged perpetuals trading available for its primary asset and the capacity for it to make money, even if the company itself is completely gone and shuttered and doesn't exist anymore, or barely exist, or never really existed, that feels like a problem, is I guess all I'm saying.
Yeah. Here's a quick pivot just for fun. Bearded was asking if it's true that ICP does 11.4. Don't quote me. I've already missed the number. 11.4 billion transactions in a recent month. I sure can't find this, but you know what I found? Here's another cool research tool for your toolkit. This is tokenterminal.com. This is a freemium website. They have, I do believe, a couple of premium features you can check out, but they're like CoinGecko, but different. You can research some of your favorite crypto tokens, ecosystems, a variety of things. And when I look up the ICP page, I can see, for example, metrics like transactions per second. They've also got like token turnover, circulating supply, different categories, financial, so on and so forth. In the technical category, transactions per second, they are tracking over time the speed of the network. They also have a graph that compares this to other layer 1 blockchains over time. So as you can see, like ICP has mostly been in lockstep with the rest of the industry in terms of how like congested or clear it is, and its capacity hasn't changed. ICP, compared to the other blockchains they measure, has the best throughput in terms of transactions per second that it is capable of running. Number one,
I reject all that.
4.7K per second. Hold tight. I'm getting there, Alex. Solana's number 2, Tron's number 3, and boy, does it drop off pretty quick. The number 3 blockchain, Tron, just 134 transactions per second. But whether or not this metric means anything, I would say really has to do more with how many people are trying to put transactions through on
there. It
network. Token Terminal also tracks this. They call it transaction count. So let's see. In the last 3 years, they've had, according to this, 446.8 billion transactions. And Monday, it looks like they did 2.8 billion transactions. Now, I'm a little curious and skeptical about this because it extends it over the last 3 years. We can see that still here, ICP also has a majority of the almost 50% of the market share for transaction count. So I'm going to look into the methodology while Alex, you tell me more about why you're skeptical about this number.
Okay. So first of all, a couple things. And just for the record, I'm not making this up. This is accumulated fact-based opinions over years of talking to engineers about this because I find it interesting and also I'm very skeptical. Blockchains in general measuring their transactions per second and the way that they advertise it is kind of like a car company putting their cars in neutral and then rolling it down a hill with a really strong wind at its back. They're going to give you the lowest lift transaction and what it's capable of in the perfect scenario, theoretically. These are all theoretical. Or if they have been tested, they've been tested in-house. We have only ever really seen a couple instances throughout the history of this industry wherein real human beings capable of making mistakes and trying different things and layering different kinds of transactions at the same time, all with different lifts. A good way to think about this is, why is gas on ETH more or less expensive depending on the transaction? Because not all transactions are created equal. Minting an NFT from scratch is much higher lift than me sending USDC on ETH from my wallet to Evan's wallet, where the tokens already existed. Nothing had to be minted or created, right? Like these things are different. So when a blockchain like ICP that has, because I would be very curious. So they say, how many transactions did they do on Monday? You said like billions?
Yeah, on Monday, it was 2.8. Yeah, I guess that is billions with a B. 2.8 billion.
Yeah, so I would be really.
And go ahead.
Go ahead. So
I was hoping to find. I was hoping to find more about like what counts as a transaction. I just found the way they do the math. Basically, they multiply the average transactions per second across the day. You know, if it starts out really fast, ends up really slow, they take the average. Let's say it's 10,000 transactions per second or whatever, and then they multiply that by the amount of seconds in a day to come up with the total trans. So they average out and then they multiply. But it doesn't say here where they're pulling the numbers for how many transactions are being processed and what. I was hoping to find like what constitutes a transaction. Is this a bot activity? Is it so go ahead. I'm going to dig a little deeper for that.
Yeah. So there's basically just another good example of this is GitHub commits. We've measured blockchain success by GitHub commits. And anyone who has used GitHub or like works with software engineering knows that not all GitHub commits are created equal. Like technically it is a commit for me to change the font on a headline tag or something, or change the size of something or whatever. That's all a commit. So if someone has 10,000 commits in a day, what are those commits? Are they notable or are they superfluous? So a lot of these are also like that. If you were to go and do some digging and say, okay, ICP, let's just stick with that one, does billions of transactions per day. That's what's being reported. What's the technical definition of a transaction? Compare them to something like Bitcoin. How does it compare? So ICP has different parameters for what constitutes a transaction, including message executions or update calls, which is the GitHub equivalent of changing the font back and forth a million times in a day. Because ICP has like a few thousand users, maybe altogether. Like we know that those people are not individually doing thousands of transactions per day using this network to do stuff. And that's fine. Like the blockchains are capable of doing a million different kinds of transactions. If one of them is really useful for one versus another, great. Just know that like this metric is really easy to inflate artificially. And the proof is in the pudding. Like, okay, so how much of the token is getting used for this? What kind of activity is there? If I, a new user or a curious user, am like, ooh, wow, this seems to be a really poppin' ecosystem. I'm gonna get in there. What can I do? Nothing. Oh, okay. So what is everything that's happening? Oh, it's just these, what was it called? It's just these message executions.
Yeah. Message execution. That's exactly what it is for ICP too. I'm looking back here. They count message execution on their network, not strictly a token transfer. This could be like the way ICP works, and this is actually really cool, is they've got what they call canisters. That's their technical term for it, but it doesn't, it's not very it's kind of like, side chains or parachains. Basically, they solve the problem of scaling by creating these like little scalable mini environments.
Can we just insert a quick disclaimer here that
absolutely
none of this is to suggest that like ICP doesn't work or there's something wrong with it or we dislike it. By all accounts, anyone who were to look critically at ICP would say, wow, Dfinity, the lab behind it, doesn't care at all about any of these traditional measures. They're not making any effort to go out and get new users, grow the ecosystem, bring on new projects, fund stuff. They're not making any real efforts there. They do have a grant program. I have worked on it before. It is hard to get into, and they're just not that interested in most things. They have the things that they want to do. It's a research lab. They experiment, they mess around with stuff. By all accounts, the construction is cool. It's interesting. It works. It potentially could work at scale with a lot of users doing a very diverse group of different kinds of transactions to accomplish all sorts of things. They just don't care. It's not a priority. So this is not a knock. I'm not sitting here saying that ICP is like falsely advertising to anyone, because they're not. It's just, this is the reality and they seem content with it. So, I'm sure it's fine. Anyway,
they made a ton of money once in a token sale that basically serve the purpose of funding their future research. And now they've got hundreds of millions, I would imagine, dollars just earning interest for them so their scientists can continue to build a decentralized cloud computer. That's what they're trying to do. They want apps to run totally on chain. And so a transaction could be other stuff you might do on the internet, like an API call to get data from a website, a message between smart contracts or other actors. It could be like a website state update, a user request, withdraw money, or tap this button, or change the color, whatever, loading a page, fetching a profile, sending a chat message. It counts front end stuff and back end stuff. That's what's in this like on-chain messages. Most blockchains do this off-chain. They have a server, they have an API. So if an app of any kind runs entirely on ICP, then it's generating just a ton of transactions on chain.
Yeah, a single instance will trigger dozens of specific and individual transactions to honestly, the fact that the count is that high is sort of proof that cool. what they say about how their system works is actually true.
Yeah. But they're only this is very different than the activity on Polygon or Solana when people are transferring USDC. ICP recently, it generates a couple $1,000s in fees a day. Historically, their lifetime revenue is like millions of dollars. Ethereum generates millions of dollars per day. Solana usually, what was the other day? It was like a couple 100,000, like high 100,000s, and that was a low day recently. So different stuff, different purposes. And once again, I will tell you, the token at one time was a helpful instrument for speculation and fundraising. Now, the use of the token, even if the use of the network were to increase and we were to put our whole internet on ICP's chain, like maybe then there would be some significant like raising of the floor. But as with all crypto tokens that don't really have a functioning utility for the thing, let me back up. The token has a functioning utility, but it is not necessary for, if everybody starts using ICP, that doesn't mean that the price is going to go up to $1 million trillion. The number one thing that's going to drive ICP's price, you know what it is? It's hype. So, shout out to our friends at Defendity for building something that works, for working on it, and for sticking with it. But don't go out, because you're impressed by this and buy the ICP token because you think that use of that protocol, growth of that protocol is going to translate to growth of your token's value. A lot of crypto tokens and ICP just don't work like that.
It's an interesting rabbit hole to fall into, to learn about non-financial applications for this kind of tech and what all is encompassed by that, to go and say, hey, ICP reports X transactions per day, whereas Solana reports Y. What is the difference between these kinds of transactions and like what's actually happening? And you'll get a really good breakdown. Someone asked the question. Hang on, it was really good. I don't understand what this means for us. Does it help us in any way? What we're learning here. So, my hypothesis. Is that one of the things, if not the thing, that leads to the most aggressive loss of investor money in the world of crypto is not understanding what it is that you're buying. Tell me why. There is no other world of investing where you would be throwing tons of money into things because, and this is a legitimate reason why I see many people buy cryptos, because wow, the price has really cratered. If it gets back to even a half of its previous all-time high, you're going to be a millionaire. That to me, that's insane. So I think that the more we all collectively understand about what it is that we are being advertised, what it is we're being sold, and what it is that we're buying, as Evan completes yet another forever pour, for the people in podcast land, the thermos is out. Then I just think you're going to make smarter choices and you're going to be less likely to part with your money to acquire tokens that by all accounts are not going to do well in the future, that do not, that just don't work the same way that other tokens do. Like the pool of cryptos that you could buy that are backed up by like a bunch of data to say this could theoretically be a good investment is small. So that's what I'm taking from it. It's why are we so quick to spend so much of our money on tokens that we barely know anything about, just because at one point in the past, for a brief second, they were worth more than they are now, and maybe one day it'll get back there. But I don't know how much money they make. I don't know how many people work there. I don't know if anyone actually works there. I don't know what the product is. I don't know how long it's been. I don't know anything about it other than at one point it was worth more, and now I want to gamble.
It is the number one way people lose money in crypto. Like if you're wondering why does it matter, it matters because most people who ask us questions about this are asking questions because they want to make money. They're scrolling through TikTok lives and going on Facebook because they think that crypto is going to make them money. And they're not necessarily wrong, but what they're most often wrong about is how. And by understanding how it works, you can avoid losing money. You can start making money. You can avoid losing money. I think sometimes too, the other thing is because we don't lead with how much money we made or whatever, and because we don't have these like flashy cars and lifestyles, anybody who's driving a Lambo in a TikTok video is trying to fool you or probably to sell you something. They're usually not your teachers. The same way that the person running around screaming is not in control of the situation, you should look for somebody to teach you who can explain it to you clearly, who can link the concepts to practical applications. Somebody with a lot of rings and Rolexes and gold teeth, that doesn't mean they know what they're talking about. And neither does it mean they know what they're talking about if in the past they picked a crypto token that went up in value. Like a lot of that is just luck. It's just gambling. It's not replicatable. You want to find a teacher who can show you the process they took to get measurable results and then help you transfer that process onto your own life. In this instance, Alex and I are walking you through how we know that big transaction number, one, doesn't translate to economic value, and two, probably isn't going to translate to hype. So that next time you hear somebody in a room say, ICP used to be worth this much, it's going to be at least worth this much in the future, you can temper that with like some reality. Also, it's good to know reality doesn't always matter. If you're in a room full of people and somebody says ICP is doing 50,000 transactions a second and they're all a bunch of millionaires and billionaires and they all start foaming in the mouths and buying it, then maybe you've got some good inside edge to buy some ICP because they're going to pump the price of it. You know what I mean?
And that's exactly what we're talking about. Like this artificial prop up that can keep tokens relevant long past the point that they should be, because they do all, no matter how out of business, useless, worthless, crashed, cratered, whatever a token may be, it could just arbitrarily go up in price because the thing driving the price is almost always exclusively speculation.
Have you heard, the question comes, of simple DEX on XPR network? Kind of like Pump Fun, opened 3 weeks ago. No, I have not. XPR. Man, what great branding.
By kind of like, so that's the Metallicus thing.
I see it here.
Do you mean, so kind of like Pump Fun, it's just a place where anybody can launch a shitter?
Yeah, it says experimental software, use at your own risk. Nothing here is financial advice. Tokens here are created by third parties, not endorsed by us. Anyone can launch a token here. You may lose all your funds. I understand. Let's go.
This is not a dig on anyone individually, but it is kind of a dig on all of those networks. I feel like the conversation that I always see about new and emerging projects like this is usually like, hey, this thing is useful, not like the stupid Solana casino that just has memes and shitters. And then their eventual playbook is to just take the Solana business model and drop it on their own network. Yeah,
it looks like it. Trade and launch tokens. So let's see, total TVL on the platform, $99.3 thousand. Total 24-hour volume, $34,000.
So you said
like there are
a couple weeks old. I mean, for something like this, I don't care about TVL as much. I would expect.
No. They've launched 161 tokens. 121 of them have graduated. Now, here's the other side of the lesson Alex and I just gave you. If you're an investor, you're probably looking for long-term value, right? You maybe want to set it and forget it. You don't want to be a day trader. But if you need a little more adrenaline in your life, Doug, I'm looking at you, and you're trying to figure out like, oh my God, what's the hot new thing on the internet? This may be the move for you. It may be in your vested interest to like get up in the morning, tweet about dex.protonwhatever.com and try and tell everybody it's new, it's early, and get in before they get in and smoke your cigarettes while you wait for them to pump it up and then get the hell out of there. But that is not the same as like, I buy a little Bitcoin every day and one day it's going to be worth a lot more than it is right now. This is like handle with oven mitts on, drop it like it's hot the second it starts to crater. Platform. And you are playing against, like, you know, I want you to be real here. You're playing against professionals, people who are online 24 hours a day. They don't have good relationships with their friends and parents. They sit inside at their computer screen, and this is what they do. And so you're kind of like getting into a race car on a racetrack, and it may be that you've never driven a race car before, but the people who play here, they drive race cars all day. This is all they do. And they are in the business like this ObiCoin guy. Somebody, shout out Raging Cajun in the comments, was mentioning. Did you see this, Alex? Oh my God. Maybe.
It sounds familiar.
I can't even call him Mr. because I have just disdain for the way he operates. Yazdani Mamda. He is ObiCoin's founder.
Okay.
ObiCoin is also a meme coin. But his latest project is called XPT. And he was on TikTok Live the other day answering questions about this like new utility coin with the contract address on the screen. And guess what the last 4 digits of the contract address are? PUMP.
Yeah.
So it's going to have this utility and it's going to
For the record, that was going to be my only guess.
Yeah. So he's got a token. For people who are new, pump.fun tokens, meme coins like this, it's like if Alex and I were to launch a t-shirt line and to print them all at Shopify. We're not making them ourselves. We can't really flex the design. It's not custom. A pump.fun token and Proton Z SimpleDex token, they are what they are out of the box. If I come to you as a founder and say, I've launched this new token, it's going to be great. It's going to be a strategic oil reserve. And you see PUMP in the contract address, run fast, run far. It's a meme coin. All it can be is speculative and hype. Now, if you're the first person to hear about it, and I'm going to have 500 people in my live, and it just launched 2 minutes ago, go ahead and buy it. But what you're betting on is a gamble. You are saying, oh, snap. This guy's going to have 1,000 suckers in the room who are going to pump the price of this token. Just know what you're doing. Just know what you're doing.
Yeah, you're playing musical chairs with a guy who not only has his finger on the button that plays the music, but his butt also never leaves the chair. And also there's only one other chair. And also you can't see where the chairs are. And also you don't, there's no like method for you to sit down. As rigged as the game can get, that's how these things operate.
So you're telling me there's a chance?
Yeah, technically, Luke, and that's why they still are alive. Yeah, you could Luke get lucky. That's what it is. You're betting on luck, nothing else.
We got 2 comments here I want you to address, Alex. The first, the California gold rush was all speculation and it built the West. And Luke says investing is all gambling.
Yeah.
Do you have a...
No, I don't disagree. I think that it's a really interesting topic, because if you really just stick with crypto and you get down to it and you're like, okay, well, here's a thing that like makes a ton of money and has a bunch of real transactions and a bunch of real users, and it's being used for something legitimate that is in line with whatever it was launched to do, blah, blah, blah. Those things still rely on speculation in order to drive price up. The monetary value of quite literally everything that has ever been given or assigned a monetary value by a person, a society, or a group of people in any capacity is quite literally just whatever the collective believes and has decided that it's worth. And that's true about literally all of it. The only thing that changes is the size of the group who believes that the thing is worth whatever they've all decided it's worth. My example would take any crypto. NFT collection, anything. If 10,000 people decided that this token, and they all are the only holders, there's 10,000 holders and all of them get together in a room and they're like, hey, this thing's going to be worth $10 a piece. And that's what they all agree, that they're not going to sell it below. All of a sudden the thing's worth $10. Does anything else matter? No, that's what it's worth on paper. So yeah, for sure. I think the difference here is, why is someone called to speculate on something versus on another thing? And if you're called to speculate on something because of tangible, measurable, articulable data, that is very different than, well, maybe. So, yeah, I mean, take that for what it's worth. I mean, the foundation of currency is the collective agreement and belief that the currency in question is worth something to someone, perhaps articulated by its capacity to bring you food, water, shelter, the only things that truly matter for survival, and then luxuries. So if you can use this thing to get those things, then you believe it's worth something. And if you can use this thing to get more of those things, it's worth more. And that's all it is. That's literally, there you go. That's the definition of value for everything that has ever existed, ever. I agree.
We're dealing with likelihoods here. If everything is speculative except food, water, and shelter, what you're asking yourself is, how likely is it that this thing is going to be as valuable or more valuable tomorrow than it is today? Mm-hmm. With gold, maybe that's the easiest example. But you might also look at something like, I don't know, the Pokemon brand identity. McDonald's and Disney, they're probably like world-class IP, the most valuable intellectual properties in the world. But Pokemon in the last 30 years has been catching up, and in fact, by dollar figures, has surpassed them. So the question is, does it seem likely? Will it hold the test of time? Is it a better investment to invest in Disney or invest in like the rising star who hasn't been around as long? Is it a better investment to buy gold or to buy Bitcoin? Is it a better investment to buy Bitcoin or to buy ICP? You're asking yourself here what seems likely, because you're trying to predict the future when it comes to turning your value today into more value tomorrow. You could be gambling on a business. Alex and I are gambling on a business by investing our time and talent here, 100%. Trying to create value for people. And we're saying, yes, we think it's likely. We get up and do the show every day because we have a lot of control. We see the return on investment. That's like reading a prospectus for a company. We have the information that informs our conviction. All this comes down to that. But some things are easier to verify than others. Some things are data. Some things are vibes. You can make money both ways. But Alex, back me up on this. Most people we see who make the most money are doing what is easiest to verify and seems most likely. Whereas the people who lose the most money and waste the most time are spending their effort and energy on more speculative, risky, less likely things.
Yeah, I think, Luke's follow-up comment here is that gold has done really well for me in the past 2 years. Yeah, I mean, dude, for sure. I mean, if you've a couple years ago buying it and looking at it now, 100%. My point is, though, that you can't eat gold. I doubt that anyone is building their shelter out of gold bars. You can't wear it. What we're trading on there, what we're betting on, is the idea and the knowledge, the understanding that many millions upon millions of people around the world place value with gold, and will continue to do so because it has been around for a long time. It has been historically respected as a medium of value, as a store of value, as a hedge against instability with other things that are less firm, and that it will, and the speculations that will continue to be the case because it has done so well historically.
There's a comment I really liked from Bearded earlier. I highlighted on the screen that said the California gold rush wasn't speculation. Responding to Wall Street, it was a treasure hunt. By the point the gold rush happened, we knew gold was valuable, and we knew it was there, just not where. So, it comes kind of full circle. Wall Street says here, everything starts as an idea. Incorporating the idea, or like how it manifests among the people, is what makes all the difference. So, nuance, there's not a lot of it out there, but I feel like it's here today. I want to invite people, because we're getting to that time. We're in the second half of the show. As I choke on my tea. Wait, to say, hey, we've got more great shows this week. If you enjoy the guests we have, we've got our friend Drew Simon from Crypto Altruist coming tomorrow. He was a fellow member of Epoch 9. And Thursday, we have got, who do we have Thursday? Oh, I've already forgotten. Oh my God. Who do we have Thursday? Alex, I'm going to have to look it up. I really took this break before I started coughing to say, one of the things that we ask people when they're new to our community, when they're new to our show, I see a lot of new folks in the audience, is please tell us a little more about yourself. If you're watching our show for the first time or you haven't made time to comment yet, let us know more about who you are. Are you just curious about crypto? Are you a crypto user who's like bought some crypto, but like you don't know how to use a wallet yet? Or are you somebody who's trying to figure out like, which crypto tokens do I even buy? What can they do? Or maybe you're like a total degenerate. You are the person in the meme coin trenches. You were the first person to build on this new XRP Simple Dex. Great. We would really like to hear from you, and then to know what it is that you're working on, like trying to understand, to figure out, or what questions do you have as we round out the last half of the show. Thursday, shout out to Tori. Thank you for the assist. We have got friend of the show, Tom Guarisco. You might know him as TJ Ledger on TikTok. Tomo Crypto is another previous handle he's had on Facebook, and he's been here in the audience too. Just a nice man who's been really helpful in sharing his own journey through crypto with people like you and me. I really admire him, his wife. We got to meet them in Canada and thought they were just delightful. So I think he's going to have a lot of cool stuff to share. He just got his DCAA certification, little digital asset specialist that he is. He's going to come and talk to us about it. Alex, now that I have made it to the other side of this call, I do see a question here. And I do want to say the pour was longer than the coughing attack. Bearded said in the comments, yes. Did you see how long it took me to pour this whole cup from that thermos? Dude,
it was amazing.
That was at least 45 seconds.
It's insane. It's so unnecessary.
I know. If I opened it more, though, the leaves that are inside that are steeping would just fall out. There's no like screen inside, and I don't want to have. I already have to like chew them up and spit them out, my little mate bits.
All right, I'm gonna send you a present.
Are you gonna send me
your life?
You got a screen? Oh man, that's gonna be great. Everybody's gonna be really sad though. My pours are gonna be so much faster. I think there should be a poly market on a pour duration. Tim has a question for us, and we can touch this quickly. I really would like to spend this time maybe telling him where he can find this information. Tim says, hi guys, new to the channel, had a look at your videos, and I appreciate the transparency. I know you've talked about it before. What is your opinion on XRP? We have talked about it before, and if you go to rumshq.com or the link in our bio, wherever you're listening, you'll go to a website that has all our little social pages on it. Right at the top, you can find us on Facebook or TikTok or YouTube. But we also have the podcast apps like Spotify and Apple Podcasts. And I recommend that you head over there. Recently, we had an episode where we discussed XRP at length, and I'm pretty sure Tori ended up popping it in the title of the episode. XRP something, 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 or what something, something XRP. Shouldn't be too far back. If you can't find it, then head over to community.rumshq.com and we can find a better link for you. My opinion is kind of like Alex said about some of these other tokens that eventually peter out and die. I think Ripple as a company is doing real work, big work, has a lot of money and swings a big bat. I think XRP, the token, is not really tied in any meaningful way to the business operations of Ripple, the company, the way it's been presented to be on social media, such that the number one driver of its price is hype. If Ripple, the company, is adopted by banks and people are using its network and its services, the math isn't math, and that it's going to translate into a meaningful like increase in the floor of value of XRP. It's not an equity. It's not a security, really. And what makes its price go up, at least for now, is hype. I think it's a meme coin. I think it remains relevant because XRP, Ripple are on the front page of the crypto internet. I think if they decrease in relevance, that the token will enjoy less hype prices. Thank you for the assist. Episode 417, Tim, has more. Why we don't talk about XRP, the uncomfortable truth about Ripple and crypto influencers. Damn, what a clickbait title. Whew. Okay, thank you. You want to add something there?
Not really.
That was it. That was his addition. Was
I am exhausted by XRP and its existence is, I think, the best way. Rather than give my opinion, I will give you my answer to why I don't talk about it more than I already do, which is too much. Because I personally harbor no ill will whatsoever towards any of the holders of XRP, anyone who believes in it, anyone who is investing in it. I don't have anything against it. I don't despise the company. I was rooting for them the entire time they were mired in the lawsuit. All these things are true. I believe that very few communities in crypto deserve a pump more than XRP holders. And I will be there cheering them on if the price does turn around and, go do incredible things. I'm truly, truly rooting for you. I'm tired by it because I can't share my actual personal opinion about like why I don't personally invest in it without immediately being ignored, all of the context being ignored and removed, nuance being completely dead, and a bunch of angry people who are down bad just yelling at me for being a hater. So I would just prefer not to personally. I don't hold it. I will not be holding it. I'm not interested in it. There's nothing interesting about it to me. I have a lot of issues with the way that it gets advertised. I have a lot of issues with people who make their entire career about effectively lying to people about XRP on the internet. So I'm just not interested, but I truly want the best for everyone who invests in it and is holding it. It would be insane of me to like root against you. So I would just rather not, because I just don't care about it. I don't care. I wish that I didn't ever have to talk about it again. That would be my perfect little world where I did not have to talk about XRP.
Yeah. Alex, here's a rapid fire question for you then. Which has more growth potential, Bitcoin or Solana?
I think that's really hard to say. I think Bitcoin is more established. I think Solana makes a tremendous amount of revenue. I think that Solana has a very rich and diverse ecosystem. I personally hold both. I could not confidently tell you which one has more specific potential, if that means like which could do the most percentage in growth. I'm inclined to say Bitcoin. But I mean, I don't know. They both have lots of supporters. They both have lots of dissenters. They both have controversies. They're both very much in the public eye. I don't know. Yeah, I don't know. Like I said in the comment, I really can't answer that. I hold both because I am convicted in both assets, personally.
I've got to say, I was watching. I like to watch all our colleagues, and I was watching Jake Claver on a live last night, and I was looking at Digital Ascension Group because I don't know. I won't belabor the point, but Alex. I think in another life, if we enjoyed it more, the way for us to really succeed in business and honestly would make a lot of money would be to do the work to start a family office and then compete with somebody like Jake Claver to say, listen, if you've got money, his firm targets ultra wealthy individuals. We wouldn't have to do that, but to say, hey, I get it. This is hard. This is tough. We've got the licenses. We've got the clearances. We've done the homework. We can set up your LLC. We can set up your trust. We can hold the assets for you and just forget about it. Just stop, put it down, put the meme coin down. Just give it to me. And I don't think I would enjoy that job as much, but I know we'd make a ton of money, and probably it would be really satisfying to compete with somebody like that one-on-one in the tennis matchup. Like, who is more trusted? I was having that thought last night. It's making you what?
I hate this.
You hate it? I know, me too.
Yeah.
I hate it too, but I actually think we'd be really good about it. And I think somebody like Stecklerish, aka Dixie Fireboy, in the comments would appreciate just letting go of his H bar and giving it to you.
Is that true?
You could send him, and then you could send him a message every quarter and say, like, you're doing fine.
Going really well, dude.
Don't worry
doing
about
great.
It. Trust me, bro. In a little prospectus sheet or something.
What
you know what I mean?
What a grift. What a colossal grift, though.
Yeah, I know there are a lot of people doing that. Jessica mentioned iHodl. I don't think that it's necessarily a. It is a grift in the sense that you don't need to do it, but I really think a lot of people find value in that service. I think there are a lot of people who would turn around and say that has changed my life. It has made me money. It has simplified the thing, and they're happy to pay somebody else 2% of their entire net worth or whatever assets under management they have. I don't know, man. Might be the move someday. Might be the move. It seems like a grift to us because we see how easy it is. We want you to feel how easy it is, but I don't know. Different strokes, different folks. Hello, Helen. Thank you kindly. Helen said, feels like a very safe place and down to earth. We also had a comment from, where did it go? I see it here. I see it. Tim, you're welcome. Podcast land. Thank you for your patience. Lori said this, Alex. I'm fairly new to crypto. I've been buying a little over the last year. I still don't have a wallet or even know how to set one up. I'm nervous about who to trust, what to believe. You're about the only ones I feel 100% are honest with us. Lori, thank you for the kind words. If you're still struggling, whether you're a day in this or a year in this, I'm telling you, somebody asked me this the other day too. What's the easiest way to learn? What would you do if you had to start over from zero? I would say jump into the Rise Up community. Community.rumshq.com. It's a free to join, great place to learn with others. We've got stuff you could buy. You could get a coaching with me or with Alex to accelerate your learning journey. But really, the best thing to save time and money is to be around other crypto users. And when you have a question, you can ask without worrying somebody's going to try and sell you something or scam you something. Anything to add to that, Alex? What you would say about not being certain about who to trust or what to do?
Your hesitation to trust is going to save you a tremendous amount of money. You should, vet everyone that you get information from and be skeptical of all of it. I mean, that means a lot. I like Evan said, I really appreciate the kind words and you being here. As far as I would say, the thing that I pull out of that is like a actionable piece of something. If you're nervous about getting a wallet, that makes sense. There's a lot of risks associated with that. There's some new responsibilities, so don't rush it. Like Gandalf in the Fellowship of the Ring, he arrives precisely when he means to. You will self-custody precisely when you mean to. And but no, I agree. The community is a great place to get second set of eyes on something that you're skeptical about. Ask questions, hang out, vibe, all that good stuff. Mm-hmm. I would say that learning about self-custody and managing a wallet is a very worthwhile skill, though. 100%. That's where I would be focused.
Yeah, that's right. You can do it one step at a time. And I would recommend, if you're trying to figure out wallets, that you would start by reading about them, Googling them, asking your favorite AI about them. Some brands you might consider researching are Arculus, Arculus, Ledger, Trezor, Trezor, Ellipal, SafePal, Tangem. And if I'm going too fast, don't worry, you don't need to write this down. You could just Google top crypto wallets. You might encounter words you don't recognize, like hot wallet, cold wallet. What's the difference? And that is exactly what the community is for. Next website you go to, open a tab, is community.rumshq.com. Just type it in and hit enter and search to say, Arculus, has anybody talked about it here? Or type your own message in any channel and just say, hey, what's a hot wallet? And somebody will answer you. We can explain it. As you learn more, ask new questions, then share what you're learning with somebody else, and you will find maybe after a while that this particular wallet seems easy to understand, seems worth trying, and we have video resources, step-by-step things to show you how to start doing it, how to send crypto tokens, receive them, custody them securely. Plenty of stuff. Alex, I see you're scheming a Lord of the Rings show. We're going to have a watch-a-thon? Director's cut with Alex's commentary?
A reading of the Silmarillion.
Oh, God. I love it.
Dense.
That's so dense. Spare me. In other news worth talking about, justifying the price of speculative assets, according to Arkham, Tom Lee's company BitMine, the world's leading holder of Ethereum tokens, just bought another $123 million of Ethereum tokens, Ether. BitMine now holds almost $10 billion of ETH, 3.75% of the total ETH supply. And they hold over 2.5% of all ETH supply in staking. Interesting. They are buying and staking ETH. What a time to be alive. Alex, IZQ says, I couldn't read the whole Silmarillion.
Yeah, I don't blame you.
Yeah, it happens. It happens. It happens. If you have to 5K between movies about walking, it's a skip for me. That's a great point, Steve. It's a whole movie about walking, for goodness sake.
What a walk, though.
What a walk, though. It's a tremendous walk. Alex, it's about that time we got to think about riding our dogs and ponies into the sunset. And I would love to know if you've got a final thought for us.
Someone asked, when will Arculus offer staking? They do through the app. You can stake a whole number of things. Someone was asking about can we get an update on the status of the Purple wallet?
Yes, I had to apply for a Dun and Bradstreet number today because, bless them, the Arculus team has a whole nother department that does their wallets, and we only really got to connect. They had a reorg recently. They merged with two companies. Good news for them. And they brought in a new CEO, and understandably, we got kind of shuffled around. They're like, hang on, we need to figure this out before we start doing any new wallets. So we just met with the wallet team last week. They have to have us fill out a bunch of different little paperworks and things so that they can give us approved vendor pricing, yada, yada. I'm sorry, because for a long time, we've been saying the Purple wallets are coming. The Purple wallets are still coming. The update is, though, it may be a couple more weeks. If you're interested in getting your very own Rums co-branded cold wallet, the best thing to do is head over to community.rumshq.com. Just search Arculus. Tori's got a form pinned at the top of the public forum where you can sign up to say, hey, notify me when this becomes available. And that's what we're going to do. The second they tell us, hey, we can start taking orders, we are going to send you a quick email ping. You can swipe your card or put in your Stripe information, whatever, and then boom, the order will be started. Hopefully very hands-off until you receive a delightfully packaged, co-branded Purple wallet. This one's my XRP one. But if you just can't wait for that, you know, Arculus, getarculus.com. And even in the TikTok shop, they've got great deals on excellent cold storage devices. We recommend them. Hey, Alex, on the way out the door, what is the dusting attack? We have a commenter here who wants to know because they recently got a Ledger Nano. And I see you responding, but it sounds sketchy. Dusting?
Yeah. So dusting is it can be used as an attack. Sometimes it's just spam, like getting junk mail in your email. It's not necessarily harmful. It's just annoying. The safest way to do it is if something shows up in your wallet that you did not ask for, you don't know where it came from, treat it like getting an email with an attachment that you are not aware of the sender or the reason or the purpose or what it is. It's safer just to pretend it doesn't exist. Unfortunately, the longer a wallet address is used by you as your daily driver or as a wallet that you do DeFi stuff with, that address is going to be circulated more and more and more and more as an active address. And these things are all publicly queryable. That's the nature of blockchain. And so it could be anything from a guy who just launched a new meme coin that wants the deck screener metrics to say that it has 100,000 holders. So he airdrops it to 100,000 random people just because he's trying to pump up his numbers. Or it could be a malicious attack wherein someone sends you something trying to trick you into interacting with it so that they can steal from you. Those, honestly, I find to be much fewer and farther between than the former, which is just spam mail like junk. But it's still safest just to assume the worst and not interact with a token that shows up in your wallet that you did not ask for.
Well said. We've got another cold wallet question coming from Helen asking about the Arculus wallet. When she tries to buy Ethereum, it says be sure to verify the destination address when using EIP, Ethereum Improvement Protocol. While it's incompatible with the standard, may incorrectly scan a QR code. I don't know what this means. Alex, can you speak reasonably to it?
Yeah. And I was trying to, I have it written down because I just did this with my mom, actually, when we were setting up her Arculus and moving ETH.
Nice.
I can't remember the name or the specific number of the EIP. So if anyone knows this number, or Helen, if you wrote down the number of that EIP that you're talking about off the top of your head, let me know. I could probably figure it out and post about it in the community. But effectively, I can answer the question regardless. So there is an EIP that basically condenses and streamlines the ETH wallet address generation process to enable QR code scanning to allow you to deposit. The good news is that you can do either one. The safest way to make sure 681. Thank you. Got it. So effectively, it just allows you to generate QR codes in order to request payments on Ethereum. So if you're in the Arculus app and you click, deposit or receive ETH, it will give you an option. Do you want, however they label the EIP 681 thing, or I think legacy is the other one. If you're unsure, just use legacy and you'll get your standard 0x wallet address, which you can then use to deposit the ETH to whatever wallet in question. So if you click legacy inside of Arculus, it will give you the 0x. You can copy that wallet address and then paste it to the sending wallet where you're going to transfer the ETH from. So if you have a MetaMask and you're going into your ETH and you click send, it prompts you to enter an address. From Arculus, you would click receive and it gives you an address. You can copy that one over there. Just you can see if you're not sure. It's just kind of a cool, it's a new update, but you don't have to use it, and you can honestly use either one. Not every sending and receiving wallet, depending on which wallet you're sending the ETH from, may not have the capacity, may not have been updated with 681. So you may not be able to scan a QR code. If you can do it that way. If you can't, just click legacy and everything's going to be fine. That'll be the more standard process where you get an address, copy it, do the transfer.
Yeah, and this is a good example of a question that would work well in the community. If you take a screenshot of that and then paste it in any channel, we can see exactly what you're looking at, and we can help you figure it out. That's not a cause for concern. That's something that would be okay to share. And honestly, I could see a world where somebody would scan that QR code and send you $1 of ETH and just be like, hey, here you go, here you go. It seems like a fun little thing to do. But
yeah, but it's not it's a neat new feature, but you don't have to use it. Is the bottom line. But good question.
Here's one more on the way out the door. Radio Dan, friend of the show, good to see you, asks, what is the public perception of creator coins like on Zora and their constant posting to improve the price? A future Evan token?
No,
not like that. No,
bad.
I think
the day Evan launches a token is the day he's fired.
Yeah, I think most people are pestered by the presence of all you can do is buy it creator coins. Personally, that's what I think. I could see a world. I have seen some brands that are crypto native launch tokens for their channels, tokens per stream. Mostly they're phrasing it as we're trying this experiment. You can collect the stream. They use the word collect a lot. Collect this token. It's a collectible. It's a for fun thing.
Do a
I don't know
app if
anybody
that's what you really
who's
want.
seriously trading them. I just don't know anybody who's seriously trading them.
Because they're
And
garbage.
I don't know. I think
If you really want to do something that is a collectible to commemorate a thing that happened, use an NFT for it. It's 1,000,000 times better.
Okay, but here's the problem Zora is trying to solve, and this is where it falls short, but I see why it's different. The trading fees thing. You remember back in the day when everybody was talking about how when you buy an NFT, 6% of it goes to the artist forever. And if I sell it to you and you sell it to you, the smart contract automatically forces it. Well, NFTs don't have as
until
much
the
velocity.
platform doesn't respect the smart contract and opts out of it.
But hypothetically, don't confuse the people. A non-fungible token is not going to have the same velocity. A collectible is not going to have the same velocity. We're trying to solve the problem of how do we pay creators? How do we get out of this parasitic loop of I rely on TikTok to reach you. TikTok doesn't pay me when I perform well. And if only there was a way for people to support me directly. That's what these tokens are trying to solve. And they're saying like, oh, somebody could buy this token to support you. The value could go up as more people support you. And then maybe they could make money by selling some, distribute the supply. You make your fans, your like co-supporter. You know what I mean? Like that's what they're trying to do, which I think is, I mean, come on. You can understand why they do it.
No, I wholeheartedly reject the premise entirely. Okay, listen to the way that you started this scenario. Hi, I'm a creator. I'm using TikTok. I'm using whatever platform. They don't pay me, so you have to. First of all, stop. That's a platform problem. And why is the platform never in question? Like, why is there not like a louder public outcry for revenue share generated by the fact that creators are the only reasons that anyone is on any of these platforms? Why is that not where we're starting? Instead of like, let me get a quick vehicle to like launch an on-demand Ponzi scheme to get more money straight out of the people who follow me. That feels like the wrong direction to get off on the wrong foot with. That's why are we starting there? First of all, that's a platform problem, not a user problem, not a creator problem. We just let the platforms get away with it because we feel like we're beholden to them, which is that's the parasitic nature of an extractive relationship. Furthermore, these tokens have never worked, and by design, they cannot work. They are flawed inherently because it's an open participatory system wherein there is no merit to determine who is allowed to participate in these things based on their participation on your channel or your watches or your comments or who's an engaged viewer, a listener, a contributor, supporter, whatever. It's just like, here's a thing that you can buy that you're personally, as one of my most diehard fans, more inclined to buy and keep forever out of your loyalty to me as a creator. Meanwhile, I've now created a world where you're the softest target ever. And people who don't care about you or me, but just see that the money's sitting there, can come in and rinse you forever. Because I know that the creator has now entered into a relationship with this token and with you, wherein they have to pump it and shill it as long as possible because their reputation is now tied to this thing's success. And as it starts to fail, they're going to get more and more worried. As it dips, these creators are going to constantly be telling you, oh, wow, great time to buy the dip. And then you keep buying it. I keep selling it on you because I don't care about you or the creator in question. And bada bing, bada boom, everyone loses all their money except for the people who came in and rinsed you. And now that person's just going to move on to a different token with a different creator who's like trying to sell one and make it happen. How many TikTokers in crypto launched their own token?
I don't know.
Are any of them down less than 98%?
Oh, I'm sure they're all down.
Okay.
I'm sure they're all down, or they're irrelevant.
It's irrelevant.
Okay.
The whole thing is irrelevant. It's predatory. It's bad. I hate it.
For the record, I agree with you.
I know you do.
I don't disagree with you. I'm asking a question because I play the guy on TV who's like, "Tell me about this, Alex." But
I know.
But
it's very triggering for me.
I'm sorry. I'm holding you. It's okay. It's going to be over soon. It's going to be over soon. I really believe the frustration we share about this could be solved, and I know you're with me, by more flexible tokens. I think the whole entire problem could be solved if someone with the influence and power of, say, Jesse Pollock, instead of harassing people to get on chain for $50 on the street, instead of coining it, if instead he spent, 2 weeks of Base's next sprint building a platform where people could do exactly what you said with tokens, Alex, where they could create some parameters around how the supply is allocated, where they could choose to distribute tokens like Tori also suggested, to people who engage with content totally free. Like everybody who's here on the regular should get some Rise Up tokens. If we also decided to release like a token per stream, maybe it should just be like a POAP. And we should have a way to airdrop fungible tokens to POAP holders and so on and so forth. These little mechanisms that could change the dynamic from the only way you make money is when somebody else loses money to a rising tide where tokens signify parts of a creator's story. The way, you know, a program autographed by Taylor Swift could become a collectible that generates value for her and for the fan who has it. That's, I think, the solution, Radio Dan. That's the kind of creator token, the kind of ecosystem that uses tokens to benefit creators and their audience by sharing the value that we need. Okay, this is my real last question I would consider answering here, because we do got to go. And I do think there are a lot of really good ideas in the comments. Have I lost it? Have I lost it? Nope. I have lost it. There you go. There you go.
Rip.
Sorry about it. There are lots of good comments though. People asking about the white whale. People talking about how
Down
that
80%.
couldn't work. You know, the example there is this is a token that is not flexible or programmable. It's a pumped out fund token. The only thing that can be done with it, with its billion supply, which is hard coded, is that it can be bought and it can be sold. And if somebody has a lot of it, they can design games around it like the white whale is doing. But eventually, because the only way to really realize any value from that thing is to sell it. The burden of proof is on the white whale to see if they can do something different. But so far, nobody has really done anything different with their meme coins. And it's not that they can't imagine doing something different. It's that the design of the token limits them because it reinforces this cycle of, you want to make money on this token? You got to sell it to somebody else. If you want to support our show, how about I end with this? This would be my final thought. You want to say something about the white whale?
Oh, no. I mean, it's like a creator token. It's down 80% from its all-time high, and it's fresher. And that's one with a pretty gargantuan effort behind it. And it's still down like that. It's just a flawed model by itself. It is a inherently flawed model. And again, I would just say that if you are a creator, it's more worth it to lend your voice to hopefully a growing amount of people who are like, hey, you can send gifts to people on TikTok. TikTok takes half of when that happens. So perhaps don't do that, you know, like or make a point about it, make the case to change that. If you want to propose policy that could help, then maybe talk about some sort of more reasonable amount of revenue share that's required by a platform who makes billions and billions of dollars a year to give back to the people who make it happen. YouTube's had a pretty solid monetization model for a very long time. We're moving away from that. I don't know. There's so many like better things that you can do with your time as a creator than launching a Ponzi scheme and hoping that it stays propped up long enough for, I don't know. I can't even fathom, like, anyone who's capable of like critical thought and forethought in any capacity should be able to like look at every example of a creator token that has ever happened and existed and be like, yeah, no, I don't want a piece of that. And then just not do it.
The thermos is back.
It's still going.
It's still going, and we're just about 3/4 of the way up. I've got a trickle here. If you want to support the show in a non-extractive way, first of all, listen, everybody who listens to the Rise Up Morning Show who's trying to make some money in crypto should be buying Bitcoin, okay? If you don't have a Bitcoin buying solution, you understand the value of it and you don't have a solution, you're not sure how to do it, how to accumulate it well, have I got an answer for you. Check this out. This is RUMS, RUMSHQ.com. It is the link in bio wherever you are, whenever you listen. And specifically, this is the little menu, recommended tools and deals. We're working on an even simpler solution coming soon, so you don't have to navigate. But this is where you find it in the little banner here. It looks the same on mobile. And we have a link that you can use to start buying Bitcoin on river.com. This is the best investing decision I have ever made. It costs you zero. There are zero fees on recurring buys. 0 fees on withdrawals. They have the absolute best spreads in the industry. Like I was saying, they don't have any other junky tokens that they sell that they got to spend money on maintaining. All they do is sell Bitcoin. And if you use this link, it costs you nothing extra, but it supports the show. They give us a small percentage of like the fee, or if you buy $100 of Bitcoin, they give us $5 of Bitcoin. It's great. They are awesome. I really like them. River.com when you use our link. Check it out at the rumshq.com recommended tools and deals tab. And while you're there, the other thing you can do, if you want to support the show, you can become a premium member. It's a 10-day free trial. Then it's $30 a month. And it does unlock a lot of perks. Will has just started this workflow where now Claude is summarizing from the transcript all of our episodes if you don't have time to come to the morning show. And they're really good. It's not just like today on the morning. It's not like the YouTube description. Today on the morning show, Evan and Alex talked about river.com.
I was kind of surprised.
It's good. It's
how good the first attempt was.
Dude, it like links to the clip in the show. And it's like Will showed the bear flag and then it broke out at 75. I mean, it's like hyper specific.
Yeah.
It even gets the links right when we talk about a link. So Tori is masterfully working that into our post-show workflow. The premium members are going to get that, and hopefully it'll become a free newsletter for everybody. But premium members get discounts on coaching. You get free, no additional cost office hours. I'm telling you what, everybody who's been to office hours, I know a lot of you are here right now, can testify. I'm sure they will. If you ask them, that is like some of the most valuable time we spend together, because it's, like your own hangout, get to know each other better, build the kind of trust and community that helps you ask better questions and learn more. The people who are in office hours are the people who are far and away learning the most. And I think they're also probably having the most fun. At least I am. We really have a good time. So,
and mine finally start.
And
we're
Alex
only 4 weeks away from mine finally starting.
Yes.
I am a big fan of this.
T minus what? 14 days? Something like that? Till you're free. Office hours is amazing.
Beginning of April.
And we're getting Alex. We really appreciate all the premium members, all the free members of the community. You don't have to spend a dime to learn with us, but it is a pivotal part of supporting the show and making education possible. I think we've said enough for today. I think all the other shows are starting. Bullish Babe is probably like, where the heck is the rest of my audience? Although hopefully you'll say hi to her from us. You got trust issues tonight, don't you? So people got to come on back for that. 7:30 p.m.
7:30.
Central Standard Time. Eastern Time? I always forget if it's Eastern or Central.
Eastern.
I'm so sorry.
7:30 Eastern.
That's the show I don't watch live. And if I'm being honest with you, when I catch the recording, it's usually only a minute. I'm like, did it work? Okay, great. I would like to be there live. I would like for you to be there live. Are we continuing book club with the new book?
We're picking a new one. Yeah.
Oh man, I'm so behind. I gotta go. If you're interested in crypto, politics, policy, trust issues, is the show for you. And we will be back with more morning show tomorrow. My friends, you're the best. Until then, everybody stay safe. Be well. All of you. Rise up.